time to get a growth plan, try to do something about generating growth, because we are headed towards collapse. Seems like the death spiral. Look at Spain, 24% unemployment, and you're now going into austerity from that point. That is the Great Depression.
Wow, well, those were some pretty bold and harsh words by Professor Danny Blanchflower on our program earlier today, talking about the economic troubles facing not just Spain, but the entire Eurozone, talking about it falling apart. Now, I've got Nicholas Sargen on with us, and he is with us he's the Chief Investment Officer at Fort Washington Investment Advisors, Josh Lipton and Dominic here as well. Nick, as I mentioned, some pretty strong words coming out from one interested observer on Europe. And it's surprising because we're not seeing a huge reaction in equity futures to what seems like it could be a death spiral in Europe.
I'd say, Betty, with all due respect, I think the statement is an overreaction. Let's put things in perspective. I visited Spain many years ago, and the unemployment rate there was 18, 19%. And I said, well, why don't we have rioting in the streets? And the basic answer is, in Spain, there's an underground economy. So a lot of people
What does that mean, an underground economy? You mean a lot of transactions in cash and okay.
That's correct. That's correct. So I don't dispute, though, that the unemployment rate as measured has gone up. But even the data for Spain, for the last quarter, minus 0.3%. This isn't the Great Depression. I think that the real issue, though, is Spain is doing austerity. And you can't do that alone. They are trying to embark on labor market reforms. That's the right thing to do to eventually get their unemployment rate down. But the problem is it comes at a difficult time.
Well, Nick, it's Dominic here. One of the things that we highlighted earlier this morning was this kind of divergence between Wall Street strategists who look at the big picture and Wall Street analysts who look at company specifics. Analysts think we're going to hit a record in the S&P 500 here, but the strategists are a little bit more concerned about the macro. So who's going to win out here? Are we going to see record highs in the S&P, or are we due for a bit of a correction here?
I've been in the camp of a correction, but not as a bear. I just simply think we've got to be realistic. We rose 25, 30%, more or less a straight line. So I've been expecting the pullback. If anything, I've been pleased it hasn't happened yet. But on the earnings front that you're alluding to, I also am more of a macro top-down guy. And I looked at the GDP data on corporate profits, which to me is indicating that we're going to be in a slowdown phase. So that had been the biggest
Nick,
prop to the market.
Right,
yes.
but Nick, why are you pleased that the correction hasn't happened yet?
Well, what I'm simply saying, Betty, is I think the markets are much better behaved this year. Last year, they'd freak out and everything. And I think what the central banks have done is take away tail risk. Take Europe. Mario Draghi is not going to let the European financial system collapse. But we didn't know that last fall, so everybody would overreact to news. This year, we're taking the news in stride.
Hey, Nick, it's Josh. Given your view of where we are with the U.S. economy, where then do you see opportunity in the domestic equity market? Which sectors would you be overweight and underweight here?
Actually, what we haven't done so much is on the sector front. For example, we had an overweight last year in financials, and you could go, whoops, and that wasn't fun. But one of the good news is that we held on to the positions, so we got rewarded this year. Okay. So that said, I wouldn't jump in there. What we are doing is a mix between value stocks and actually dividend yielding stocks. So we've been trying to stay somewhat in the middle, given we think we're in a trading range.
Well, quickly on the dividend, I mean, would you sell your dividend holdings, if you felt that, in fact, Congress was not going to pass those Bush tax cuts?
I'd certainly discuss it as the date approached. The reason is, Betty, we did an analysis, and if no news is priced in other words, the market thinks the Bush tax cuts will be extended, and it doesn't happen, we think the market could be vulnerable to, say, 10%, maybe dividends a little bit more. So the real question is, as you get closer, that's when we're going to do our homework. I don't know that we'll necessarily sell, but we may hedge some of those positions.
Nick, thank you. Nick Sargen, and a lot can happen in the next 3 hours. Nick is going to be back with me on my radio show In the Loop at the Half today at 12 noon p.m. Eastern Time.